Hey, so this is begin a roadmap of where to start your bookkeeping business in the right order. So this video is going to be very informative. It might be a little bit more in depth than some of our other videos because I want to cover a lot of different areas, and I want to make sure this can be like a standalone guide that you can use in your first like year of business. Because like I wish I had something like this when I first got started. Now I got started back in 2015, and the bookkeeping space looked a lot different than what it does today. It's a lot easier today to get things moving, but as a result of that, it causes things to be harder because there's a lot more competition, and your potential clients don't necessarily know how to select a bookkeeper as easily as what they used to. Okay, so let's go into this thing. Number one, first things first is when did I know was the right time to actually leave my job and go full time into bookkeeping? Now, this is the reason why I put this in this because a lot of people choose the wrong time to go full into their business, and it really caused them to struggle a lot, like more than what they need to. So it really came down to freedom. So the ultimate goal for me was like freedom. I wanted to be able to go where I wanted to go, whenever I wanted to go, do what I wanted to do, whenever I wanted to do, and not really have to think about money or think about stuff like that. But when I was starting, like that was the ultimate goal. I had to make sure that even though I had like a long-term vision, I was still moving from the reality that I was actually in at the time. So what I would start your business while you're still working your full-time job. One kind of myth that a lot of people think is if I could work 40 hours a week, it'll be so much easier to grow my business than if I could spend my spare time at work. That's not actually true. Starting a bookkeeping business, the marketing element has diminishing returns. So for a lot of people, including myself, like, it would be funny because anytime that I have like maybe like I would take like a day or two off of work or I have a sick day or something, I would end up being less productive in that 8, 9, 10 hour day than what I would when I just had a little bit of spare time, maybe on my lunch break or after work, or if I didn't have to commute that day. With the 3 or 4 hours, I actually got way more done than when I had 8 to 10 hours because I was at home all day for that day, right? Now, again, there's diminishing returns, and for most people, you're just gonna have too much free time. It's gonna cause you actually to be less productive than if you learn how to grow your business while you're still at your job, right? Now, the next thing is a lot of people wait for the whens. So the first spectrum was they were just trying to quit their job cold turkey. They're going to go and attack and spend 60 hours a week working for themselves. The opposite side of the spectrum is when I'm out of work, when the kids are grown, when summer's over, when, I've saved up an extra 10, $20,000, right? When, blah, 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 right before I reach, like, the whens are things that kill a lot of people's dreams. So I know if you're watching this video, you're probably not making that mistake. Just in case you are, it's better to start now with the limited time that you have and kind of work your way up to it slow and steady than it is to go full in, burn yourself out, and never really reach your goals. And understand if time is really tight, that's good. Learn how to do this stuff while time is tight because then when your time like gets less tight, once you leave your job, you're going to be that much more productive and you're going to be ready to actually have a full-time like schedule. You need to earn that full-time schedule. Now, another thing is like when do you actually start quitting your job? So we said earlier you don't want to go like cold turkey. I like to focus on like my monthly bills being paid. So for me, I recommend most people like quit their job when they're at 1.5 times their monthly bills in revenue. So let's just hypothetical example, let's say that your bills are 1,000 a month, right? When you're at 1,500 a month in revenue, then you should leave your job. Now, I also like to do that after about 3 months, and I want to make sure this is after tax dollars. Okay, you don't just want to do 1.5x, like you still have to pay tax on that. And also remember, when you're self-employed, you often have to pay like estimated taxes like on a quarterly schedule. Now, for most people, when you're starting your business, like the first year and a half, you're probably not going to do estimated taxes because you just don't really have any history. Like the first year, it's not like the best not to do it, but it's relatively normal for you not to pay like estimated taxes on that. Now, again, that's not tax advice. This is not my tax planning channel. This is just my starting up your business channel. Because most times, like, you won't have a full year, and you'll just have like revenue just come in and out, and it won't be like a full business. Now, if you're working, you have a system that's going to move you towards six figures in under a year, okay, that's a little different. But if you're watching this video, you don't have that system and you're like working slow and steady, it's not super uncommon for you not to do estimated taxes in your first year. Now, I would still recommend if you do have your LLC and stuff, like you do pay some tax in the first year. It's not big as like what you're probably thinking, but you want to kind of get things off to a good start. Because I think one common misconception people had, so this is 3, 4, 5 years ago, like a lot of the payment processors would not necessarily report your income to the government if it was like either 200 transactions and I think it was like $20,000 in like revenue, right? If you had 200 transactions, but you didn't have $20,000 in revenue, then it'd be one thing. Or if you had 20,000 revenue, but you did not have 200 transactions, then it would be like it wouldn't report. But nowadays, it's not like that. So like they're gonna be reporting regardless. So just be aware of that. You can't just kind of like sneak under the radar as much what you used to. So I would still recommend paying some taxes, just the quarterly amount probably is the thing. Okay, next thing. So next thing is like how much can a bookkeeping business actually make? So I want to give you a couple of different types of scenarios for you to be able to understand the difference. So the first one is called buffet services. Okay, this is just an internal fun name that I like to call it. So a lot of people, what they used to do, especially if they were like more like tax focused, with bookkeeping being like their secondary or their auxiliary services, it'd be like more like a CPA firm, an enrolled agent firm. They'd be focused on tax prep, entity structuring. They'd be focused on tax planning, business taxes, personal taxes, quarterly tax form filing, right? And then they would have bookkeeping as like their secondary thing. Now, the problem with this is that if you're working with the wrong types of clients, then every client's gonna have a little bit of something, but not a lot of everything, right? So it'll be like one client is paying you $400, $450 for the tax return, right? Individual tax return. Maybe maybe another person's paying you $1,000 for a business return. Maybe another one needs bookkeeping. Maybe another one needs their entity structure. But you're just gonna be so spread out, right? And every client's not really giving you that much money. It does run you the risk of capping yourself out because then you need to hire staff members prematurely because you have so much volume and it's just not easy enough to get into a rhythm. Whereas let's say that you have one client that needs a bunch of stuff, right? So let's say they're going to give you probably about $20,000 in their first year, right? For cleanup, for bookkeeping, for tax planning, for entity, like taking from LLC to an S corp, from doing business tax to individual taxes. All this equals $20,000 in your first year. Okay, if you get 5 clients, yes, it's a lot of stuff, but you're not going to be spread so thin in a way where it's like it prevents you from reaching your revenue goal. You can still hit your revenue goal with 5 clients, right? But again, that's very rare for a lot of those kind of firms to do that. In most cases, they end up not doing that and they end up capping themselves out. And that's why like you see a lot of them like they have like really low profit margins compared to what you would expect for that type of business. Versus with bookkeeping, it's a little different, right? So in that kind of buffet services, you can make 100,000, but it's less likely for them to make $200,000 than someone who's maybe doing like bookkeeping. Now, when it comes to strictly bookkeeping, right now, the second scenario is high volume, low dollars. So that's a lower price per client. So that's maybe 150, maybe $300 a month clients. Now, in this scenario, you can make good amount of money, but again, like the more clients you have, the sooner you're probably going to have to bring on staff. And again, you don't have to be like this giant corporation. I'm not saying that, but what I'm saying is every staff member you bring adds complexity. You have to like coach, mentor, teach somebody. And you have to be able to lower your profit margin to do that. So there is a time and a place for that, but you don't want to do too early. Now, the other risk you run is that when you're doing a lower price per client, you're again going to cap yourself out. Because if you're working a full-time job, you don't have unlimited hours. And even if you did have unlimited hours, you don't have unlimited energy. So it's like there's just so much task switching, so many different clients you're working with that just takes a lot of mental drain and a lot of mental energy that it slows down your ability to go further. And that can actually lead to burnout a lot faster than if you have like maybe 1 to 3 clients that are paying you a lot more money. Okay. Also, what I found is that like for bookkeeping clients, it's very interesting, right? Because even if they don't have a lot of money, they're not paying you a lot of money, there's something called an equal value exchange or a reasonable exchange of value. So what does that mean? So if someone pays you $1, usually if someone is a little bit more established, they're better at sales, they're better at marketing, they're better at business, they have more money, they're expecting they pay $1, they get $5 worth of services. That's a reasonable expectation. But that's for people that are doing really well. People make 100K, 200, 3, 5, a million plus, right? After a certain size, when they start making 10 million, that's when they get like more into la la land. But 100K to about $800,000 a year, if that's like what they're paying themselves, they generally are a little bit more reasonable, right? But unfortunately, a lot of the people you're going to run into when you're starting your business are people that are making like 10,000 a year, 20,000, 30, 40, 50,000 a year, right, from their business. And they live in a world of I pay a dollar, I'm expecting $500 back worth of service. And it's that math does not work very well because then they're paying you like $100, but they're expecting literally like $50,000 worth of services. So that means that they're calling you, oh my gosh, you're my business partner. It's like, why am I your business partner? I'm only getting $100. You know what I mean? It's just $100 a month. It's just not enough. But they treat you almost like their business partner because they don't understand a fair exchange of value. That's the one where you like hear people talking about, oh, this guy was calling me in the middle of the night. Oh my gosh, this person was so demanding. Oh, this person was that. It's literally because they were expecting a lot more from the value they're paying than what was actually reasonable for a regular person. That's another reason why it can lead to like burnout. Hey, so back to it. So the next scenario is going to be low volume but high dollar amounts. So I'm a little bit more, what is that called? Where bias, I'm more biased towards this, right? So lower volume with a higher dollar amount. So number one, keeping the scope like as tight as possible. Now, the reason why it's important is because you don't want to do a lot of task switching in your day. So you want to make sure it's as consistent, as simple as possible. If 1 minute you have to have your bookkeeping brain on, the next minute it's your tax brain, the next minute it's your consultative brain, then you have to do like a call with your client, and like the more times you just switch and the more people you have to have conversations with, the more mental drag this kind of adds, right? We want to keep as little mental drag as possible so we can like still remain mentally flexible to grow the business. Once you've hit your revenue goal, once you're making as much money as what you probably either want or your goal, if you're in more of a stabilization mode in your business, okay, you can do more task switching. You can, because you don't have to be as mentally flexible to start growing. But I like doing basic books, lower complexity, but a higher volume of that. It's easier to outsource and subcontract out to other people versus some people like doing higher complexity CFO services. I don't like those as much. We do offer them, yes, but I don't really like that as much because it is a lot more you focused. Now, in my journey, I like doing like videos like this, right? So I don't mind spending time talking. I just don't really like doing a lot of back and forth, right? That's my weakness, right? In terms of that. Now, if I liked doing more screen time, and it's not that I don't like talking to people, I just don't like sitting on Zoom for very long. That's the problem, right? Because like with my eyes, it kind of makes me more tired. So I don't like doing Zoom. Now I'll do a phone call with you all day. I don't mind that. But in a lot of cases when it comes to CFO, it's easier if you do CFO services like over Zoom. So you can like share your screen, you can give like more presentations, you can do presentations, you can screen share, and it's just a little bit easier. But for me, for example, I just like keeping the scope as simple as possible so you can just selling as many bookkeeping products as possible. Same thing with like cleanup services. So I do like cleanup services because once you get into that rhythm, it does move a lot faster, right? So it's either that I like the high monthly recurring because it's easier to keep them engaged. And here's the other thing. Now, when you do have a lower volume, higher dollar, you don't want to go ultra low volume. So what I mean by that, so let's say that your goal is to make 20K per month. You don't want two clients at 10K per month each, right? Because then if you lose like one of the clients, your income just got cut in half, right? I would probably do it more like maybe let's say was it 20,000 divided by 8, 20,000 divided by 8. I would probably want to have like more like 6 to 8 clients. Let's say 8 clients at $2,500 per month. That's why if you lose a client, your income is not like 100% devastated. So understand what I'm saying. And like when I say a high volume, right? That's when some I've seen some people have as many as 200 monthly bookkeeping clients. So they're a very small firm, barely making 15K a month at 200 monthly bookkeeping clients versus when I say lower volume, that's like around 8 to about 12 is when I say low volume. So it's like lowerish in the grand scheme of thing, but it's not like ultra small, right? And just keeps everything a lot simpler. You can move a lot faster. Okay, next thing, so client growth. So how to actually grow as a bookkeeper slash an accountant. A lot of the time it's right just about getting better quality clients. So having a better fit client is actually better than having volume, right? So better clients, again, reduce stress and increase profit, okay? So what to look for? Clear needs, quick communication, and respect for boundaries. Okay, so we're gonna talk about what to look for and what not to look for. So the next thing is like really making sure they're preventing scope creep as much as possible. So the reason why we said what to look for, respect for boundaries. Now, a lot of people, when they do scope creep, like it's very overt. It's like, hey, I know we said this, but can we also do this? Can you also do this? Now, that can happen sometimes on accident, right? And it's okay if a client does it to you like one or two times, but if it's a current thing, like every single thing is a recurring theme, okay, that's a little different, right? So, for example, preventing like your scope creep. Okay, so you have to define the deliverables. That's why an engagement letter is so important, making sure they sign the engagement letter that holds things tight. Making sure that you just understand like certain people are very demanding, cutting those people off as fast as possible. Next thing, even meeting time limits. If you say your meeting times are 30 minutes long, cut it off at 30 minutes. Don't go sit there for 2, 3 hours long. That can happen very easily. Next thing is just making sure that your communication boundaries are met too. Like you don't want someone calling you at 2 a.m. in the morning. I know it sounds crazy at 2 a.m. in the morning, but that'll happen. That has happened. So you can start identifying who is not a great fit, but do they place constant objections in the sales call? Are they on time for your sales call? For your sales calls? Do they even show up for your sales calls? That's a big thing. If they don't even show up for your sales calls, like I maybe give people like maybe 1 to 2 reschedules. I do the same thing for my mentorship programs. If someone doesn't show up for the first one, they don't have a really good excuse or reason why. Okay, boom, we're done. You don't get another chance. And it's because like people can get very loose with that. Like they just miss one, they miss two, they miss three. Oh, can we just do a different day? Or if they're super late, like 15 minutes late, it's like, bro, come on, man. And sometimes people are just like more, you can feel the energy where it's, oh, that's all you're offering? Well, why do I pay for this much for that? And then like oftentimes you hear someone's like, why would I pay $1,000 for just that? And then the problem most bookkeepers has, they start trying to discount because they're trying to win clients. In the beginning, okay, I can agree it's okay, it's about winning clients, yes. But after a certain point, you want to be very selective with the clients you take on because your time is more valuable and your mental energy is actually it's the most important thing you have, the mental energy that you have. So it's like as like I think everyone knows this. Like every person when they're starting a business, like you take on like maybe 1 or 2 clients that you don't like. Now, this is also another reason why I would say like you should have like your job, so you're not forced to take on people you don't want to work with. Now, I'm not saying if someone's just egregious and you just hate this person, you work them because you want to, but I'm just saying there's some people where it's like on the edge where they're not like bad, or they don't have like bad intentions, they just are terrible. Right? So you have a short list of people who, as soon as you start getting a client that's either like the same income or double income from that one client, you cut that client like loose. But you can tell. So it's like you want to just turn away like very overt and obvious bad fit as soon as possible. Right? The ones that are on the fence, okay, you can bring them on when you're trying to build your firm. Next thing is you'll know if it's like a good client based on like how easy it is to close and if they've consumed your content beforehand. So let's say you give them like an FAQ, let's say you give them like a business resume or you give them some videos to watch to explain your service. If they watch, that's a really good sign they're very compliant and they follow your process and they're very serious. Same thing with some people don't like this, but I love this. In between I break my sales call into two pieces, right? So one is like discovery, understand their problems, and just getting like understanding. We call this our 15-minute call. The second one is like your sales call. So in between that 15-minute call and your sales call, we ask them to send us access to their books. Now, a lot of people don't send me access to their books. Number one, there's an easy way that you should be doing it to get at least like 70% of the people to send it. But even if you get 70%, there's still that 30% of people that don't do that. That is actually a litmus test. If someone is not either willing to give you access to their books, or someone who cannot make the time to do that, or they're not willing to let you get on Zoom and control their screen and give them instructions how to do that, okay, that's not a good fit. If a person's, oh, I don't trust you to look at my books because they're very private. You think that just because I give you money, like literally think about it like this. If on Monday they don't trust you to look at the books, then on Tuesday they pay you money, then Wednesday they're gonna all of a sudden trust you? No, there's a really big chasm you have to overcome. So it's like you can chase that down and kind of like figure that out and make that work. It just depends on what stage of business you're in, right? So if it's easy and they're already doing that and they're doing those micro commitments, that is a very good sign that you're getting better quality clients. Another thing that's important is look at revenue. One thing that we talk about, so if they're too small, they're going to be super focused on taxes. They're not really going to understand the importance of bookkeeping. If a person asks you in a consultation call, why do I need a bookkeeper? Or I don't have that much. If they're telling you I don't have that much, I don't think I need a bookkeeper, they are generally going to be too small. It's People that are the right size know they need this. Like it's not like something you have to educate people on. Very important distinction. All right, cool. So next thing is like, how does this actually make money, right? So what is online bookkeeping business like? What are the different services that you should be like breaking down? I had one of it's actually very interesting, right? Where it's don't overcomplicate this stuff, right? Okay, so client setups and chart of accounts. Okay, so this is actually a really simple service. Let's say that they're a new business, they're starting to grow like the right size. Hey, can you help me set up my QuickBooks? Okay, that is a service that we offer, right? So you charge for that. That one's not too hard. It probably takes about 2.5 hours to do that. It's not super large, it's not super long, right? That one you can charge like between 285 like $300 for that. Next thing, like monthly bookkeeping plus bank recs. Okay, so for that one, we always like to recommend between 500 to 5,000 per month. Inside of our training program, we give you like a pricing calculator, so you know exactly like how much you should be charging, and it basically helps you understand all the different features. So not just like monthly bookkeeping and then another service. It's like everything together. So you can tell like how much time will each of these things take and like how much should you be charging for it. It makes it super easy. And plus like you can go like line by line with them on the calculator. Also, if you ever want some help like inside our mentorship program, just click the link inside the description below. Book a call and see if we can help you inside our program. So next thing is financial reports, P&L, balance sheet, cash flow statements. It just very simple, right? Usually that's going to be like the deliverable for cleanup, which actually the next service, which can be like your cleanup slash catch up. That is actually one of the highest dollar items in bookkeeping. Now, it's not that it's exponentially more than like regular monthly bookkeeping. It's just that it's you're condensing how much time the books are. So basically, let's say that they're a whole year behind. You're basically charging for 1 year's worth of service up front. Okay. So it's a lot. I like it. It just does a lot for your business, right? Cash flow in your business is just all about getting as much cash as you possibly can on day number one. Now, here's a cool thing too. For the monthly bookkeeping, you can get a client to pay for the whole year up front as well, especially at the end of the year, right? Very interesting to see that happen. Next thing is like ARAP. You can also add in payroll if you want. I like AR. A lot of people like don't like it. They're like, oh, it's just so data entry like heavy. It's like, okay, you can always have someone do it for you, number one. But you can, in a lot of cases, you can double your monthly price quote just by adding AR. So it's actually really a good service to offer when you're like starting out your business. Next thing is like tax ready books, and so you can hand off to a tax pro. That's just making sure if you have a little bit of background in tax, you can just kind of make it make sense from like a tax perspective, have better quality notes, you can hand off to the tax pro. That's really simple, really easy. I like that service as well. Now, when you're trying to grow your business, there are a couple different metrics to be aware of to see like how healthy is your client, is your business. So number one, AOV, that's average order value. So I like to track that like on day number one, how much cash are you collecting on average, right? So this is good, right? You want to get this as high as you possibly can. Let's say if you can get on average $5,000 on day number one, that's going to give you a lot of flexibility down the road. It's not as important when you're doing a lot of stuff for like your marketing for free. If you're using like LinkedIn or Facebook, it's not as important. But if you ever want to advertise your business to grow faster, the amount of money you can collect on day number one gives you a lot more freedom to advertise heavier, right? So let's say that you're spending like maybe $1,000 a month on ads, right? If you're doing that for, you should be getting a client every, let's say like $200, right? It would be like a good rule of thumb for Facebook ads, right? So at $200, you spend like $1,000, that should be about five clients. Now, for that one, okay, so if you spend $200 a client, if you get like month number one up front, let's say minimum 500 bucks, you're over double. You're 2.5xing your money on day number one, right? That's really important. But if you start advertising a little bit heavier, let's say you start spending $3,000 a month on advertisements. Sometimes, if your advertisements are not as efficient, when you're spending the $3,000, instead of it costing $200 per client, it might actually cost you more like $500 to $700. So now, if you're still collecting only $500 a piece, you're losing $200 immediately, which is not a bad thing, right? A lot of businesses will operate negative for the first month. That's not a bad thing. But it's a lot better for your business when you're spending lower and you're collecting that 500. So now when you're spending more money, you have to get that average client value up higher. So maybe instead of you're spending like $700 per client. Now you have to try and get $800 to $900 upfront for every single client. You see how it's different? So if in the beginning, even when you're getting your clients for free, if you can get that average order value on day number one to be like $1,000, $2,000, $3,000, then it makes things a lot easier. That's an easy way to do that, just by charging a cleanup fee for almost every one of your clients. Either a cleanup fee or in the marketing space, they used to call it a setup fee, right? You can do the same thing for your bookkeeping, but you want to see if you can get at least 6 months to a year's worth of income prepaid before you ever even start, right? Just makes everything easier. Now, the next thing is your lifetime value of a client. Now, the cool thing is that the longer the lifetime value, again, the more flexibility you have. So we talked in our previous example, when you're spending $1,000 a month on ads, it costs you $200 to get one client. When you're spending $3,000 a month, it costs you $700 to get a client. Now, if you're not able to get a lot of money up front, like a high average order value up front, then it can still, like I said, it can still be okay. Like you can run in that negative like for the first like month, right? And if you know a client's going to stay with you on average for 3 years, right, you have 36 months. That means only that 35 out of 36 months were profitable. Okay, I'm willing to lose a little bit of money in the business and pay that $700 to get $500 up front if I know I have 3 years worth of monthly fees that I'm going to do. That's like a $36, like $1 in, $36 back. That's exponentially huge. Usually in the online space, whenever you spend like $1, you're expecting to get $3 back. So if you can get $36 back, you are like an elite marketer at that point, right? But a lot of people don't know it's not that your marketing's so good, it's that your business underneath is really good. So it's like lifetime value of a client is exponentially, that's a really big focus as well. Okay. Now, the cool thing with that as well is that lifetime value, as your skills increase inside of the accounting space, you can charge for more services and that will further increase that lifetime value, right? So you can get clean up, you can get formation services. So that's maybe you help them like actually just incorporate an LLC, then you take from LLC to an S corp, and then you go and like maybe you start offering tax strategy, maybe you offer CFO, and you just keep ballooning how much you're actually able to get. If you can get $50,000 for a client, let's say the top amount of money someone could pay you is, let's say like $50,000. That would make you pretty invincible. Pretty invincible. If you get the average client to pay you $100,000, let's say over the course of 5 to 10 years, oh, you would be financially invincible. Nothing could stop you, right? Nothing. Because that's your average client. That's not your best client. That's your average client. So it's okay. So let's say that, or sorry, that's your best client or your average. So let's say your best client could pay you $50,000, but your average client pays you, let's say, like $30,000. That's still really good. You get 10 clients, that's already $300,000, right? And it's just, man, you just keep doing that over and over again. You would not have to think about money. Like that's the funny thing, right? It's like when you're starting this stuff, like a lot of people are like so focused on the money, but there's gonna come a time in your career where it's like you have the money thing figured out, and it's more about like how do you just make the business either more fun, more simple, easier, and you start thinking about, okay, so how can I add longevity to this business? And the cool thing about that is like when your business is built for longevity, then you can sell the business even easier too. Next thing to focus on is like what's your churn, CHURN, plus your capacity, right? You're always trying to understand like what is your current capacity, and then also like how many clients are leaving you. Now, in a service like this, you're not going to have a lot of churn. Let's say you have 10 clients, you might lose like 1 to 2 a year, if that. You might lose two, right? So you have to be able to track that. So if you have 10 clients, are you expecting one client to leave? So if you want to just keep your income the same, okay, you just have to, in the course of the year, get one client to replace that client's going to fall off. If it's two clients, replace two. If you want to grow, if you know one's going to fall off, just get two clients a year, right? And you can just really control that. And that's how you keep your income like as level as you possibly can. Also by spreading it out a little bit, right? So like we said, churn is a lot more vicious if you have an ultra high like dollar client. Like if you have a client paying you 10K per month and you have another paying you 10K per month, and one of them leaves and it's gone. But if you can spread it out, like probably what I would say, what is this? You want like probably when you get to your revenue goal, you want each client to be worth at least 12.5%, right? That's probably what I'd say. 12.5 of your income. Right? That way, if like one drops off, you're not significantly devastated. Next thing is how much time per client. This is important as well. If you have one client that's paying you a little bit of money, but it's taking all of your time, that is not a good thing. That's gonna be on a short list to cut off. Next thing, like, what is your gross margin? Okay, this is important as well. You want to keep your profit margins as high as you can for as long as you can until you're ready to really try and scale the business. Now, scaling the business is a very weird word in the online space because a lot of times in the online space, our expectations and our understanding of the business is a lot smaller. So when everyone says like scale, if they're talking about growing the business, anything less than about $1 million per year or 2 million or 3 million, you're not really scaling. You're just growing your business. You know what I mean? Now, so it's like mo many of you guys are not actually going to scale. And like it's very important for you to understand like what kind of business model you're actually in. Are you running your accounting firm like a performance business where you want to have very high revenue? You don't really mind having a lower either take home or profit so you can maybe sell the business one day? Or are you planning on this being just kind of like something you do for the next like 10 to 20 years, depending like how long you have in this game, right? If that's the case, where it's like 10, 20 years, okay, we want this thing to be as profitable, as simple, as easy to run so that we can still enjoy like our life, right? That's really actually in a lot of cases for some people a better option just to make the business. If you can get this thing to be like a free like 150, $160,000 per year, but you're spending like maybe 5 to 15 hours on it, that's a really good lifestyle, right? Because you spend the rest of your time doing whatever you want, right? So it just depends. Now, next thing is your referral rate. Like how many of your existing clients are referring more clients, or do you have a different referral partner? So if we can track those, that's really good. But yeah, just really focus on that. Now, for beginner, just target between $6,000 to $10,000 per year per client. That's a really good first start to be at. That if you're getting 6,000 on average for a client, that means they're paying you $500 a month. If you get 10,000, that means that it's the same $500 per month client, but maybe they're paying you for about a year's worth of cleanup, right? Let's say the cleanup for beginner size like that is maybe like 5,000, right? So that's going to make things very simple for you. You just keep it very streamlined, very straightforward. Okay. Next thing, so tool list. Okay, so bookkeeping and business management. Like, how much does it actually cost to start a bookkeeping business, and like what to buy? Okay, so I like to think of this like when you're beginning of the business into two separate categories. Okay, so before your first client, after your first client. Okay, so before your first client, I would really just focus on what is going to make the business move as effectively as possible. Okay, so I am not a big fan for spending money on stuff that's not really going to lead to me getting my first client. I'm going to skip a website. Okay, please skip the website in the beginning. It's not really going to do what you think it's going to do. A lot of people, what happens is like you do a sales call, and if you're very nervous about stuff, then you're like, I need this, I need that. And when you're in a consultation call, people can sense you're nervous or they just aren't really ready to work with you, and they blame it on weird random stuff instead of telling you the truth. So like in their mind, I don't want to work with this person, not confident, this person's price too high, blah blah. Oh, do you have a website? They're like, oh my gosh, I didn't have a website. No, they just didn't want to insult you because they know you're new. They don't want to hurt your feelings. They don't want to make you like feel bad. I know it sounds weird. It's like we're all adults here, but like no one, most people who are like in business are not trying to belittle or mess with people's confidence, especially because if they remember like what they felt like when they were starting the business, no one wants to really like just like eviscerate your confidence, right? So it's not you didn't lose a client because you didn't have a website. You didn't lose a client because you didn't have business cards or you've only been in business for a day. That's not what's important. Okay. But you as the business owner have to be very headstrong and getting what you want. The first stage of learning how to grow your business is being able to get what you want. If you can get good at that, doesn't matter what you have. I didn't have a website for the first probably 1.5 to like $2 million that I had collected from business, right? Didn't have a website. Now, it can be argued I still don't really have a website. It can be argued. I use a lot of pseudo websites and stuff and like what are called landing pages. But that was after I already had a really good number of clients. Now, next thing, okay, so before you're starting and like before you get your first client, I would really focus on like direct outreach, right? So we have what's called a mailer campaign. We tell you like how to actually mail stuff out to people. So if you want to do that's optional, but that would cost you about $300 per mailing campaign. We usually have people do maybe like one, and maybe you can spend like $10, $20, $100. Doesn't really matter, but that's probably like the max I would say you should budget for. It's like $300 for there. Next thing is going to be like different social media tools. So there's different research tools like Apollo. There's another tool called Sales Navigator. There's chat for Instagram. There's a lot of different like online tools. Really, The main tool I would be focused on is like your LinkedIn Sales Navigator. That costs about $119 a month. Now, I can hear some people watching like shudder and like just gasp. It's yeah, but if you're really trying to start a business, like, and you're not trying to pay like money to start the business. You're not really serious about being in a business. I'm not saying like you're not serious like in a mean way, but it's like your expectations are too wrong. Like you have to get out of that thought process of this like an infinite money glitch where it's like you put in 1 unit of effort, $1, and you get $1 million back. That's not how business works. Well, even think about it, you don't go to a farmer and be like the farmer, hey, if I plant one thing of corn, able to have a huge farm like you, they would look at you like you're crazy, right? So it's all proportional. How much you put in is how much you're going to get out, right? Now, with Sales Navigator, there's different things we can do so that you don't have to keep spending that $119 per month. But what I'm saying is there's two different types of people, right? There's some people that just overpay for everything, like they buy a website, they have 50,000 tools, they're already in the whole $2,000 a month before they ever got a client. And there's the other ones where it's like they spend like $0, right? Next thing, so even your accounting software, so your bookkeeping software of like QuickBooks Online, that's free to sign up for, and you should not be paying for it. Don't get like an actual like client-facing one where it's $30 a month, $80 a month, et cetera, et cetera. Get the accountant's version so you don't have to pay for it. Now, the one expense you will have, and this again, this is not really a tool. It's more of like just invest in some sort of like mentorship or some kind of course. Okay. Almost everybody watch this video. If you're watching YouTube videos to grow your business, you probably should invest in some kind of course. Let's just be honest. It's not that and it's not the reason why you think. It's just that if you're watching YouTube, a lot of times the information's there, but just out of order, and it's very conflicting. So by getting a course, you're paying for a complete set of information. Even better than that be like some kind of coaching, right? Because then instead of buying a course is generally information, which is good, but implementation. So actually implementing the stuff that you know you need to do and like how do you actually do it? The what to do, I think a lot of people understand that. The how to do it that's what you really pay the big bucks for when it comes to like mentorship and coaching and consulting. Now, one thing to know, like work be on the lookout for is okay. So if you're gonna invest in something, like you want to for to learn the commoditized knowledge, right? Let's say the basic bookkeeping. I would say it's very commoditized. They teach that in almost every college. They have some accounting 101, accounting 202, and like they have that in their accounting degree programs. Okay. You can find those kind of courses on YouTube. Same thing with like on YouTube. But again, on YouTube, it's just too randomized. Man. So I would get like a very inexpensive course to learn the bookkeeping, at least the basics. Okay. What you really want to pay for in a mentorship is speed to getting your first client, as well as like marketing and sales skills. So you want to pay for the skill set that gets you the closest to the dollars. Now, someone argue, okay, so wouldn't learning bookkeeping be the skill set that's been closest to the dollars? Not necessarily, because if you sell a client first, so let's say you sell a client, but you don't do bookkeeping, right? You have the money. So what was the skill set really matter? Find the client and getting them to give you money, right? You can learn bookkeeping, or you can spend half of that money that you got for that first client and go and find a better bookkeeper to do the work for you. So you might pay them 250 for a $5 client because a $5 client might only take you like 1 to 2 hours, right? So it's like you don't necessarily need to learn the skill set of bookkeeping. You want to have an okay fundamental like understanding, or at least of what is the end goal of the bookkeeping, so you can overwatch someone else. But bookkeeping itself is not necessarily a thing that gets someone to pay you the dollars. That's so again, that's it's just not the thing that actually got you to the dollars. So always focus on that, right? Always focus on that. Now, next thing, so after you get your first client, okay, so a lot of okay, so once you get my LLC, okay, so that depends on the type of client you get first. So what I like to do is I like to get good at the sales, get good at the marketing, so you pay for that, and that's what I did, right? I spent a lot of money on learning the actual sales and marketing. That was my biggest weakness. Now, once you do that, okay. Now it's time to go and actually get official. Now, when I say official, I'm like legally official. I don't mean like branding official, right? So I'm still not buying the website yet, right? So LLC, very important. Get your insurance. So what I do is, okay, I get my first client, or if I recommend someone get their first client, you get your first client, and then you say, okay, so let me actually spend, we're gonna do your onboarding process, but let's say you get payment on Monday. Let's do your first onboarding call next Monday, right? That's about 7 days. That's enough time for you to go and apply for LLC. That's enough time for you to go and talk to an insurance agent to go and get insured. Then once you have the LLC paperwork back, And once you get like the insurance, then you can start doing the work on the first client. Okay. But again, I didn't want to pay for that out of pocket. I wanted my client to pay for that. I wanted my business to pay for that because that's something directly for the business. The mentorship and stuff, that's for you. The LLC and stuff is for the business. And again, you don't really want to have that until you're getting clients. I don't want to pay a lot of money specifically for the stuff that's tied directly to the business unless the business is paying for it. Okay. Next thing, document your scope plus your engagement terms. Okay, cool. So this is very important. So every time you get a client, you want to keep track. What did I do? How long did this take me? What am I expecting here? Is this a service I don't like? What did I not like about this client? How did I do this? So you always have to keep very detailed notes. But what a lot of people do is before they get their first client, they're like, I need to have my onboarding process. I need to have my SOPs. Like they want to get all this preparation work, but it's like it's not there. Because until you're actually doing it on real client books, it's not important, right? So it's like document your scope of work and what you're doing while you have clients. After that, you want to again, you start building an onboarding checklist. You don't necessarily want to build like an on like this huge onboarding workflow. Just maybe a short checklist. Everyone tries to automate things way too quickly. So just do it a little messy, a little dirty for a while. Maybe you have to get like your third client, and then you can make it more of a streamlined thing with automation. My onboarding process is still not very is not very streamlined. It's not like it's streamlined, but it's not automated. Okay. So I have okay, so do this. Now, within there, that takes me 5 minutes to do those things. 5 minutes total for onboarding. You don't need to automate it if it's just condensed and streamlined. Now, mine is very perfected. We've been in business for right now, it just turned 2026. So we've been in business since 2015. That's right, it's like 10, 11 years of business. But when I first started, it was terrible. But it's like clients are not going to leave you because your onboarding is not amazing. It's focus on what focus or what makes sense, like what's important. That's it. Yeah. So in terms of premium positioning, like how to market your bookkeeping services and attracting better quality buyers. So a lot of people struggle because I've seen this a couple different ways. So people that are beginners, they struggle because they always want to like tell everybody how much experience they have. And people have a lot of skill set, maybe like they're a CPA or they've done like like worked in like accounting. They speak accounting, they don't speak outcomes. So in a lot of cases, what happens is you're like, clean books. Okay, so I had a client named Eileen. And when she was first getting started in her business, her belief was that every business needed a cleanup. And I was like, okay, so I don't necessarily disagree with that. Some businesses might be like up, like ready to go, right? So they don't necessarily need like a full year cleanup. But can you explain why you feel everyone needs to clean up? Because your books need to be clean. Why? Because it's just accounting. And it's like she couldn't explain it in a sentence. You cannot explain one accounting definition with another word. So you can't say, okay, so what is accounting? Accounting is like accounting. Accounting is bookkeeping plus tax plus this, right? You, every one word that you give needs to be substantiated with a sentence. Okay, so I'll give you an example. So, one thing that's hard to do, right? If someone goes, I seem to run out of inventory at the end of every third month. Okay, I'm going to do an inventory report so that you can start. Most accounts say, okay, yeah, let's do an inventory report or inventory turnover report. They're like, what does that mean? And they're like, it's a report, it's an inventory report. And they get locked here. Okay, no, you have to be able to explain it. So, an inventory report. Okay, so we're basically going to show you exactly when you're going to run out of inventory and how many different inventory, either if you have like multiple SKUs or if you have multiple lines of products, like how much of each to order and when. How much lead time do you need in order to make sure that you are getting the right amount of inventory on the right shelves if you have multiple locations, just knowing exactly where to put the inventory and when. Okay, that is the definite, that's selling an outcome. So, okay, cool, that makes sense. Or let's say that you're going to do a cleanup project. The business owner's like, yeah, I'm trying to go and get a bank loan, but the bank says I need to have my books like in a certain place so I can have financial statements. But I've never really done that. All I do is just look at the bank account at the end of the day and see if they have more money in the bank or less money in the bank. Okay, cool. Mr. Business Owner, so we're going to do what's called a cleanup so we can actually help you go and get these financial statements prepared so that you can go to the bank and that's so you can actually go get that loan. Okay, it's all the so that's. We're going to do X so that outcome happens. Okay, always talk in terms of outcomes. Always talk in terms of outcomes, okay? That will attract better quality buyers because people that know what their problems are and understand the solution are willing to pay a lot more than maybe someone's like, oh, I don't know why I need you. I don't know why I need you. Like, why do I need bookkeeping? What's the point of this? I just want a tax return, right? It's gonna be a lot lower quality client when they're just talking about like tax returns. They're not really trying to understand what you're doing. Next thing. So I don't necessarily agree with picking a niche. I like picking 1 to 3 niches, okay? I will only go to a niche after I have significant revenue or some sort of advantage. I'll give you an example. So, like for this YouTube channel, right? I can work with a lot of different types of businesses, right? I can work with an e-commerce business. I could work with, so for example, in coaching, right? So I could coach e-commerce business because I had an e-commerce business that did like really well. I had my neighbor was a therapist, right? I showed her how to grow her therapy practice, right? I have an accounting firm, so I help other accountants. I could talk to churches, right? Because I ran like a YouTube channel for a church. There's 4 or 5 different people I can help, right? But if you notice, my channels are all dedicated towards like accounting and stuff. Why? Because I have a very distinct advantage, and it was way easier to go and get people who want to work with me from the accounting field, right? But I wouldn't know that if I just said, okay, I want to go help this person. No, you pick 3 or 4 different lanes you can go down, start talking to individuals from those different industries, and see which ones you enjoy working with. Right. So once you have 2 to 3 niches that you work really well with, if there's one that's exponentially easier or better than the other one, then you can maybe start niching down, right? And start really focusing on that. Now, the people who work best with one niche, in addition, like what I'm talking about, is if you have an advertising campaign. It's a lot easier for you to have one target, one set of problems, one deliverable, and like one offer if you're running advertising because you need a lot of consistency. So let's say you're doing e-commerce. Hey, e-commerce business owners, click this link to go to this, watch this video that I'm going to show you how I help e-commerce people order better inventory, control their cash flow, and blah, 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 blah. And then when they get on the video, the call act's like, yeah, we're gonna help you with your cash flow, we're gonna help you with your inventory, and blah blah blah. And when you're on the call, it's like, okay, cool. So I work with the e-commerce person to do blah, to do cash flow, inventory, and blah blah blah. It's very consistent all the way through, right? And you can run a lot of money there because once you know that a specific message, phrasing, and offer works for one type of person, you can keep getting more and more of those types of people, right? That's called vertical scaling. You're scaling within one vertical and you're going really deep into that industry. Okay. That's when picking one niche makes sense. But if you're just doing free stuff and getting referrals, I wouldn't really tie yourself down to just one specific niche. That should be a very strong reason why to do it. A lot of people that are saying like choose one niche, that actually comes from there was like some online gurus probably about five, no, back in like 2018. And that was like his big thing, right? Because he was selling like coaching and consulting. But a lot of the people that are like helping accountants and bookkeepers right now, like they're basically getting their playbook from those set of people. It was a different industry that was trying to apply towards accounting and bookkeeping. And they don't really understand that for accounting and bookkeeping, it's a little different. It's just a little different. Yeah, so it's that rule of that what people are saying nowadays, like it's not necessarily true, but it's just something that everyone spout in like the coaching space because they got it from like a coaching program of how to like coach and like how to do like mentorship programs. So it's a little different. Excuse me. Next thing, so content that filters. Okay, so I like making a lot of content. Now, you don't have to do video content like me. You can do written content. And again, if you're like working your job and you can't make content because you're afraid of getting in trouble, this is a little different. There's different ways you can make content without necessarily having to be like a public facing figure where you can potentially risk your job. I'm not saying that. But if you have the position to make content, doing written content, video content, audio only content, doesn't really matter. You have to be able to start getting out there. Now, the reason why it's important is because if you basically put out content, the right people will come to you. The wrong people who want to do it themselves or who are looking for the cheapest option will go away. Because it's generally expected the more content you make, the more people start seeing like this person really knows what they're doing. People who really know what they're doing don't charge a small amount of money. They charge a really good amount of money. That's the rite of passage for charging a lot of money is that you do a lot of stuff. You've done a lot of stuff, you've put a lot of time into this thing, so you should be able to charge more money. It's just an expectation that a lot of people have, right? So by putting out more content, you're automatically raising your value in the other person's mind. The more they read of your stuff, the more they're like, oh my gosh, this person just knows so much. This person's really high value. This person just, wow, I'm so lucky to be here, right? So I like doing a lot of content for that very reason. Now, the challenge you're going to have is that when you do make content, not every single person is going to see it. And the people that do see it, you don't know if they're going to see enough of it to put you in that high esteem. Now, that's neither here nor there, and that's a really fun kind of journey that you work the next set of your career to do that until you get to your revenue goal or to your financial goal. But it's a very fun kind of place to be in, learning how to do content and just it's funny because like when you start getting to the stage of you're just making content, like writing stuff and doing videos, you become an idea. It's not just like to a certain degree, you transcend just being who you are. And you become this idea that you can like shape. And it's just amazing when you can do that. Even if you don't have a million followers, it's just beautiful. When you really think about it, it's so beautiful. And like that's one reason why I make so much content all the time, is because I'm transcending. I'm trying to grow. I'm trying to be here. Even probably like 30 years from now, people can still be watching these old videos. Like here, like back in 25, 26, Rice was like this and look back when you're like retired and it'll be cool. So yeah, the next thing, and I don't know, I'll probably be retired from business probably the next, I'd probably say like the next 5, 10 years I'm done probably. I say that, but this stuff is just so easy and so relaxing. It's like there's no reason for me to stop. It's all I gotta do is just make some videos. The lighting here is like very inconsistent. Give me a sec. Okay, yeah, the lighting is very inconsistent. But yeah, you just keep going forever and ever and ever and ever. You just never stop making videos. Next thing, so distribution, okay? So part of how we get better quality clients, like where are we actually going to get clients? Are we doing partnerships? I like partnerships because you can control the flow of clients. You cannot control the timing, but you can control the size, right? So if your referral partner tells you, I only work with like beginners or people that are just starting their business, I like to do just entity structuring or like some basic tax returns. Okay, that person's probably not a good fit to send you leads and referrals. Okay, so instead we want to go after the people that maybe have better quality clients, right? And if someone sends us a client and it doesn't quite meet our quality threshold, we can go back to the referral partner and say, hey, can we like boost the client or do this or XYZ? Hey, I don't necessarily know if that is the right fit for my practice. Here's the reasons why, and here's what a better quality fit would look like. So you're teaching your referral partners how to sell for your business. Now, I actually made a book on referral partnerships that basically walks you through how to get your first or next six-figure partner. If you want me to leave a link down inside of the comment section for me to send you a link to the book, it's $5 right now. I'm still having that promotional price for people like on my YouTube channel. When I put it on Amazon, I'm going to charge a lot more for it, but right now it's about $4.99. So if you want me to go and send you a link to go purchase it, go ahead and comment 6FP down below. It stands for six figure partnerships. Okay, and I'll send you a link so you can go pick up a copy. Cool. Next thing, LinkedIn. Okay, so I like LinkedIn. Very simple. Now, LinkedIn is very similar to Facebook and Instagram. It's basically about how many people can we get to know we exist and we get on our friends list that are qualified. Okay, you can never have enough business owners that know you exist. Okay, my goal, and like for example, my goal for this year, I want to add and probably another like 2,000 to 4,000 people in my school group. Okay, get another 2,000, 4,000. It's easy, right? Same thing with my YouTube channel. I want this main YouTube channel. I want that to maybe get to, I don't know, 4,500 subscribers. My second YouTube channel, I want to get that to maybe, I don't know, like probably 1,000 subscribers. And then my third, my newest channel, like for tax planning, I would love to get that to maybe 1,000 subscribers. So that'll be what? That's 4,500 on YouTube, 4,500 on my school group, maybe an extra 1,000 on my LinkedIn. But it's every single year that you get more people, the amount of money you can make just gets bigger and bigger and bigger because if you're talking to business owners, they're generally in business for the long haul. So they're going to keep seeing you. And when you have a recurring, so bookkeeping works well. And like the reason people can do monthly services for bookkeeping is because every month there's a need for bookkeeping. A mess is made every single month. Now, that's on a micro level. So that's why the clients, once you get them, keep paying you. On a Mac, and even if they don't pay every month, sometimes like they come back once a year for a cleanup project. It's basically just like the same thing, right? But on the macro level, if a person is not ready to go with you today, they're gonna still keep having that problem over time. So maybe they go with someone cheaper for 6 months, but they don't like the service that person's giving, or the person's just not good. Okay, 6 months from now, they're going to be back in market to buy your stuff. So by you having this content, by you like being out there, by you having more people on your list and you following up with people, you're going to have a better chance of converting them over time. So it's this endless loop that you go. And it's just, yeah, man. So, and you could also, another thing that you could do is like in-person stuff. I would consider in-person stuff more like networking. But yeah, man, if you can get really good at partnerships on social media, you almost never have to leave your house. So it's wintertime. Like, this is actually a new thing. During the summertime this year, I was like, just like out all day. I was driving during the day. I was not focused. It's wintertime. Like right now, I'm like taking this week off of a lot of people facing stuff. So all I've done today, I did one mentorship call where I was talking to a mentee. He was having a really unique situation, but all day I've been just filming YouTube videos. Like literally, that's it. Right. And it's just like I'm making a lot of content. I kind of lost my train of thought for a second, but making a lot of content. Yes, I haven't had to leave my house. I can just literally just get if I want groceries, DoorDash comes in, right? And then if I want to go and go someplace, I'll go out for 5 minutes or an hour or whatever, and I come back and I can just work. And it's so simple because the only thing you need to do is make content. So right now what I'm trying to do is I'm trying to get 18 weeks worth of content just handled real quick. If I can get 18 weeks worth of content handled across two YouTube channels, that makes my week and my year so much easier. Like right now, basically what I'm doing, let's say I'm basically creating about 35 to $40,000 worth of income just from these like 3 to 4 like blocks of time that I've been putting in for the last 3 days. So it's like when it comes to distributing your message and once you get the content going, the content can generally it tends to outwork you. So I would say like partnerships and I would say like outreach on social media, like when you're outreaching, messaging people, building relationships, that is like you're building your active income, you're working your day job. Content is very similar to like your investment account or your 401k, where over time, I don't know for everybody, but for most people, over time, you get it to having, let's say you get to having about $1 million, right? And if you can have it grow at the rate of like maybe 10% a year, right? That's an extra $100,000 you're making. So depending on what you're making at your job, if you're making like 150 or if you're making 300K, that's one thing. But if you're making like 100K, you basically doubled how much you made, right? The content is the same way, where eventually the content is going to outwork anything that you could do when you're like just messaging and just doing your referral partnership stuff. Partnerships of over time can be like content as well, but so in the beginning you want to focus on stuff that you can do and control, and over time the rest will take over for you. You don't have to do quite as much. So like nowadays my business, like just growing my business is so passive because all I need to do is just talk for a little bit and then people just start flowing. YouTube will send me stuff. YouTube is like is actually my biggest referral partner. That's how I like to think about YouTube as my referral partner. So yeah, and it's just cool. That's how you go and get like premium positioning. Also, if you want some help like growing your business, like maybe been trying to get some premium positioning or maybe been trying to attract better buyers, but you just don't know what you're supposed to be doing, click the link inside the description below this video to book a call with myself. Let's see if I can help you inside of our mentorship program. Okay? Yeah, so next thing. Okay, so when you're trying to start your booking business, right? Really having a good simple system of being a self-employed bookkeeper looking for work, like what is a daily routine? Okay, I'm always thinking about my order of operations throughout the day. When I say order of operations, it's not mean how much time you have to spend to each thing, right? Because in different seasons of your business, you're going to spend different amounts of time on different things. So, first thing of my day, marketing, sales, client work. Now, when I say first thing of my day, first of my work day. So, my work day, let's say I get off of work at 6 o'clock. I have to come home. I get home at 6:30. I eat dinner at 6:45, 7 o'clock, right? Depending, what your living situation's like. You start work at 8 o'clock. Okay, so first thing at 8:01, I want to do marketing. Then I want to do sales. Then I want to do client work, right? And I like doing in that order. And same thing. So if you do in the morning, right? Let's say you wake up at 6 a.m., marketing, sales, client work. Whatever time you have, you want to do that in that order. Now, for many people, if you have some kind of day job, right, you might want to put your sales throughout like the middle of the day or after work hours. Okay, so don't be afraid. One question I used to get asked a lot was like, Bryce, if I have a day job, will business owners be a little weirded out that I'm trying to meet with them at 7 o'clock at night or 8 o'clock at night? No. In a lot of industries, people are used to doing their actual like work, like their business work. Like let's say the construction project. They do construction during the day, then they use the outskirts of the day, so before and after to do more of their administrative or business owner tasks. So that's actually the best frame of not mind or best time for them to even talk to you. Like they're not going to be able to talk to you at 3 o'clock in the afternoon for a lot of industries. Also, you can start playing around with different time zones. So one thing that I actually don't mind doing a lot is I will sometimes leave my sales call calendar open later into the night because I know that like my 8 o'clock might be someone else's 5 o'clock or it might be someone else's 6 o'clock, right? So it's like you can play with the time zones if you are really nervous about that, but still making the time that you do have work. So one reason why I like having marketing first, because like marketing is like the easiest stuff not to do. It's very easy not to write a piece of content. It's very easy not to message potential clients. It's very easy not to get back with a referral partner to schedule time to speak, right? So you have to do marketing because if you don't do it first, you're never going to do it. If you start with your client work first, you're never going to get done with your marketing. I almost guarantee it. It's never fails. Whenever I talk to a student or mentorship program, it's if they don't do it first thing, it does not get done for a week, and it's just crazy. So you always do that first. Next thing, I like having sales in the middle just because the sales, you're not always going to have a sales call. For most people, you might have one, maybe two sales calls in a week. So if you don't have a sales call, that can condense. So then you can just focus on client work as like the main thing you do. Now, if you don't have client work, you can stretch out the marketing. You see what I'm saying? So it's like you're always doing the marketing first, the sales is second, even though sales is like very important, it can be condensed and you can flex around. Client work is going to be good to have last because then you can spend as much time as you need. Like the other day, we were doing a cleanup, right? I was doing the cleanup at, I think we started like 9:30 and like we got done at like 11, yeah, 11, like 10. So it's just like I could, if I wanted to stay and do it till like 1 a.m. in the morning, I could. I'm not a person that likes doing work that early in the morning though. So like some people are night owls. I'm not necessarily a night owl. I'm more adaptable to whatever I need to be. I'm usually better like in the morning, but it just depends. I like to do a lot of my creative stuff in the morning, which is another reason why I like the marketing stuff first, because it's the thing you wake up and you can do. That's kind of how I think about it. But yeah, we have the cloud in the end of the day. You just do whatever you want. Now, the next thing is like a daily cadence. Okay, so here's the thing. So, unfortunately, when you're getting started, you might, let's say that you're working 40 hours a week in your business, you don't have 40 hours like a week worth of marketing activities to do. Like, in if this was like probably like 2017, 2018, I would say something different. Social media platforms used to be a lot different. You used to be able to like comment all day, post all day, message all day. But since the internet now has become basically just like business owners trying to get business online for free because they don't want to pay for ads, Facebook and like LinkedIn have really changed their rules to make it so that people are not able to conduct business as easily. So you have a lot of limits. Like on Facebook, you can send like 10 new messages to business owners per day on average. Sometimes you can do a lot more when you're first getting started, but you're going to get hit with a you can't message people that you're not friends with kind of thing, or you're commenting too fast, or you friend requested too many people today. Like you get all these like limit messages that kind of pop up, and it makes it very hard to sit there for 40 hours a week doing marketing. If you could do 40 hours a week of marketing, like and you could get that many messages out, the social media platforms weren't stopping you, oh, that'd be killer. You could really do some damage with that. But unfortunately, these days you can't do that, especially if you're doing very effective marketing work. So in the old days, let's say people were doing email marketing, you would have to go and figure out people's emails, and that would take a lot of time. But nowadays, with if you're just doing straight like relationship building on social media, it does not take that much time because the social media platform has already gotten all that content information. You're just hitting friend requests and then you're messaging the people. It's very streamlined and very short things to do. So you just don't have that much work. So how I'd probably do is I would actually split it up where it's okay, first things first, I'm gonna follow up with any new people that I've spoken to that were responding or didn't respond back to me or who had thought about booking a call but just didn't. I might spend 15, maybe 30 minutes doing that, right? Then I'm going to start getting new friend requests out. That might take me 15 minutes. Then I'm going to start up new conversations with new friends. That right there could probably take me an hour and a half. That's it of marketing per day. And that's like me actually trying, right? In the beginning, it might take you 20 minutes, if that, right? So it's like you don't have to spend that much time. That's why most people who have a full-time job can get this business off the ground because it does not take that much time when you're doing the right things. Now, the key thing is just that if you're doing the right things and you're being very effective, when you do get a sales call, you have to close those sales calls. When we say close a sales call, that means get them to sign up with you. If you don't, it might be a little while before you have another opportunity. You might only get one sales call opportunity per week. Some people only get two sales call opportunities per month. So if if you are being efficient, right, you just have to get good at closing. That's why I said the sales is a very important element. It's not the most important, but it's a very important element. Now, if you knew what you're doing, you had a really good cadence, you had a really good flow of leads, and a good sales script, it wouldn't be a problem. But if like you're watching stuff on your own, you don't have that, then just be aware that it's like you have to be precise. You cannot afford to wing it when you're doing this business model. You have to be very precise, especially if you're doing like high dollar like bookkeeping, because again, you're not going to get that many opportunities. A lot of people think that, okay, so if I go after clients that are going to pay me like $100 a month, okay, I'm just going to get like 5, 10, 15 clients. No, if you had the opportunity to pitch someone $100 a month, you could have had the same opportunity pitching someone $1,000 a month, right? And the only time you can tell someone that you only charge $100 a month is when you're sitting right in front of them, because they probably aren't going to read your website. So it's like you're only going to have maybe 5 to 10 shots or opportunities to do that. So if you're going to only have 5 to 10 opportunities to do that in a month, you might want to go after the clients who can pay you the most money because it's going to be the same amount no matter how much you're charging. That's a trick. That is a pro tip that no one talks about. Okay? And if you only do one thing every single day, I would just start the relationship process of adding friends, adding connections, and follow up every day. If that's all you can do, those two things to start. That's it. If you do that for the course of 3 to 6 months, you will 3 to 6 months of doing this, let's just say that you don't know what you're doing, you'll still be able to go and get a couple clients, right? But if you knew what you're doing and you only did that for a little bit, like I told the guy the other day, like I that was how I made like my first or that's how I added probably my first year. I added like maybe 60K worth of like revenue just by learning how to do messaging sequences on social media. And again, it didn't take me that long during the day because a lot of times it can be automated too. But it's, yeah, if you can get good at the simple stuff and you prioritize it first, you're gonna have more client work than what you know what to do with. Now, if you've been trying to grow the business for a while, but it's just maybe not going the way that you hoped, or you know that you can move faster, you had some like really like guidance and someone holding you by the hand, click the link inside the description either above below the video to book a call with myself. Let's see if I can help you inside of our mentorship program. Now, this is important. If you really want to get like the freedom and the lifestyle that comes with having a successful business, being able to go where you want, to be able to take that vacation without having to worry about money or time off from your work, or just a lot of the stuff that causes most people to stress out in life. If you want to live a life that's just different and just the life that you design, click the link inside the description below this video. Book the call. Let's see if I can help you. If you're on your mobile phone, click on the little circle that has my face on it. It will open up the more. It'll say like more. It'll open up the description. You can see more. You can book a call. Okay. I'll talk to you soon. Have a good day. Talk to you later.